going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
What's happened in the last few years in the American stock market, and actually foreign stock markets too, is that some traders have a speed advantage on everybody else. And they're willing to pay vast sums of money for very tiny increments of speed. And the speed with which they can get a signal from the Chicago Futures Exchange to the stocks exchanges in New Jersey is important to them. Up until 2007, 2008, the fastest line that was available was like a Verizon wireless line. And the cable, the fiber optic cable, went like this from Chicago to New Jersey. A trader on the Chicago Exchange who was sensitive to the fact that people would pay a fortune for just a tiny bit of speed realized that if he laid a straight line from Chicago to New Jersey, he could do it 4 milliseconds faster. And he did it in complete stealth, dug a tunnel from the Chicago Mercantile Exchange in Chicago to building outside the NASDAQ Stock Exchange and laid this straight fiber. And without knowing exactly the market, what for was it or anything, and goes into high-frequency traders and basically says, if you don't have this, you're out of business. And the fact that someone could dig a tunnel, I mean, it was a project involving thousands of men. I mean, it cost $300, $400 million. Ran through states, public right-of-ways in states, without anybody knowing what it was for.
And to improve speed by
4 milliseconds.
4 milliseconds.
3 or 4 milliseconds.
Right. Which is about the time it takes for the Chicago S&P's futures to be sent to New York. That is, so if the S&P goes up.
So yeah, the point of the line, from the point of view of the speed traders, is that the market movements, whether it's going up or down by a lot, register first in Chicago in the Futures Exchange. So they're supposedly making markets in 4,000 individual stocks in New Jersey. If they can get the signal first, the market's going down, they can get out, or they can even sell to other people. So it gives them advanced news on price movement.
Welcome to the Crypto Teacher. And guys, you know I come back with that second video just to make you think. And as we can see, they're still riding this GameStop and Reddit information on CNBC. You know on my channel, guys, I give you the truth and nothing but the truth. I advise you that all markets are rigged, cryptos and the actual stocks. And we have a lot of young investors that are coming into this. And I need for them to look at this video. I need for you to share this video everywhere. So therefore they can understand there's no way you can beat the system. Because the system can actually see your trade before you're making it. They're beating you to the punch. So if you think that the powers that be are not making more money out of this GameStop situation than you are, something is definitely wrong. The agenda behind this, guys, is to move the legacy economy over the blockchain, crypto, tokenization, digitization. They want everything on your app, guys, and that's what you're doing. The young people are moving in because they're making a little bit of money. Remember, when it comes to the New World Order, 2 steps forward, 1 step back. Yes, you may be making a little bit of money, but you're not going to get rich off of it. Majority of people were not in GameStop at the bottom. Majority of people are going to lose when it comes to this situation. I just want to make sure you understand that. When it comes to investing, you invest at the beginning, even before the stock even takes off. You're in it at the beginning because you see where the future is going. And that is what I teach on this channel. But y'all enjoy the rest of the video. And remember, when it comes to the New World Order, everything is planned out. Have a wonderful day.
I think the biggest risk in the market is that 50, 60+% of the volume is being executed by computer programs who have no idea what companies actually do. They're just reacting to data. And I think it's dangerous. I think it's why we have flash crashes in stocks. Last month, you had Amazon drop $40 in 4 seconds and come right back. The market value of Amazon did not change by billions of dollars in 4 seconds. The biggest stock exchanges are the New York Stock Exchange, NASDAQ, and BATS. What a lot of people don't know, though, is that the New York Stock Exchange actually owns and operates 3 exchanges. NASDAQ operates 3 exchanges and BATS operates 4. The largest conflict in our market today is that exchanges pay brokers. They have to convince people to trade on their exchanges, and that the way that they're doing that is simply by paying brokers to send orders to them. If you look across the major exchanges, it's over $2.5 billion a year, and those conflicts harm the investors who those brokers are supposed to be representing. A lot of people look at the volumes in the market and scratch their heads. You can have a stock with 100 million shares outstanding, and on a single day it'll trade 30 million shares. And people say, how in the world is that possible? It's possible when you have 12 stock exchanges in the market. So there's a chance that a buyer is on NASDAQ Exchange 1 and a seller is on New York Exchange 2. And it makes it necessary for a high-frequency trading middleman to get in between these exchanges. If I have a pen and I sell it to you, and then you sell it to someone else, and they sell it to someone else, and it goes all the way around, and it ends up back in my hands, have we created more pens? No. I mean, there are studies that say 97% of orders that are entered in the market are actually never executed. People are being paid to make it look like there are buyers and sellers in the market, when in reality, in times of distress, those buyers and sellers are rarely there. Exchanges are paying brokers to ignore the fact that the execution quality on these markets are not very good because of the advantages that are being sold to high-speed traders. Buying faster data is irrelevant unless I can trade with that data against someone who doesn't have it. So exchanges not only sell faster data and sell tiered data, they sell the ability to actually trade on that data against people who haven't gotten it yet. And that comes in the form of co-location, putting my server in the same data center as the exchange, buying a faster cable than somebody else, using microwave towers to beam my orders out when other people are using fiber optic cables in the ground. And this class system that the exchange has created makes a tremendous amount of money for the exchanges. They make more money selling tiers of data and technology than they actually do for matching buyers and sellers.
Wall Street. So what was your intention of Flash Boys?
Look, if I had just been told that the stock market's got this rigging in it, and like ordinary investors are disadvantaged in relation to these high-frequency traders, I wouldn't have been that interested in the story. What interested me was that some people inside the market had figured out what was going on, instead of trying to make money from it, trying to fix the problem, possibly expense to themselves and certainly at expense to Wall Street.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign of what's going to happen to these other workers moving forward.